Buying a car in a Chapter 7 bankruptcy or during a Chapter 7 bankruptcy is a common question that we get all the time. My name's Philip Tirone with Evergreen Financial Counseling, Jonas Ash with Ash Auto Group, and we're here to dispel any misconceptions that you may have about buying a car during a Chapter 7 bankruptcy. Jonas, how you doing?
I'm doing great, Phil. Thank you.
Jonas is the owner of Ash Auto Group, the nation's leader in car dealerships that specialize only for people that are filing bankruptcy. And this is why we had him on this call, because the common question we get all the time is if it's possible. And the short answer is what, Jonas?
Yes.
Yes, it's easy to get a car during a Chapter 7 bankruptcy. And Jonas, you've said it the best. You're like, buying a car during a Chapter 7 is like getting a get out of jail free card, right?
Yeah.
Explain what you mean by that.
Well, a lot of people don't know, but as part of the Chapter 7 filing process, you kind of get a one-time opportunity to potentially relieve your current vehicle and any liabilities associated with that, deferred maintenance, and hopefully get into a better vehicle position.
Right. I mean, so basically, when you're filing bankruptcy, and let's just use an example you've seen 100 times, 1,000 times probably. You have someone who bought a car and the car is worth $30,000, or they owe $30,000 and the
Right.
car is worth $20,000, right? So there's two options a person has. They can either surrender the car during a Chapter 7 bankruptcy, and surrender is, hey, I don't want the car anymore and I want to give it back to the bank.
Right.
Or they can do what's called a cram down. And a cram down is where you take the value that was 30 and cram the new loan down to 20,000, right?
Correct.
So tell me the pros and cons of both. What do you see from that perspective?
Sure. So, first of all, if we just talk about the values of vehicles, there's been such a fluctuation, really since the post COVID era that we've been in, where, it's very rare that we actually see clients that have considerable equity in their vehicles. Unfortunately, almost everybody is upside down. So, when you look at the cram down method, or essentially keeping your restructuring your loan on your current vehicle, it's very rare that it makes sense. One, you're going to end up with the same vehicle with the same issues, if it's got deferred maintenance, anything that's going on with it that you're having to deal with. And two, those payments typically are not going to rebuild your credit. It's very rare that keeping your current vehicle and the payments that you make on that will report to credit agencies and start rebuilding your credit, as opposed to getting a replacement vehicle, which is going to have warranty on it. It's going to have gap insurance. It's going to have some equity in it, and it's going to put you on a different path. And most importantly, with the first payment you make, it's going to start rebuilding your credit.
Yeah, we see that often here at Evergreen. So with Evergreen, we help consumers analyze their debt. They look at their debt and they say, okay, great. What are my options, right? Do I qualify for bankruptcy? Do I qualify for debt settlement? What's the right path for me, right? This is the consumers we see. And when you're going through, and for those that choose the bankruptcy path, so there's two options, what we just talked about. One is to surrender your vehicle and get another one. And two is to keep the vehicle, cram down the loan. And the reason why that doesn't report to the bureaus is because most attorneys would have to reaffirm the debt for that to report to the credit bureaus. And I think I've seen that happen one time out of tens of thousands of bankruptcies. Most attorneys choose not to do that for a variety of different reasons, which we're not going to get into right now, but they choose not to reaffirm the debt. So, and then like you said, Jonas, the problem when you do keep your existing car, and cramming down the debt is great. It's a great benefit of bankruptcy. Then if you didn't have the money to pay your debt and you're filing bankruptcy, most likely you didn't get the oil changed on time. You may be driving around with bald tires, et cetera, et cetera. So the advantage is if you can get a new car during the bankruptcy process, it works. Now that sounds weird, Jonas. People are like, get a new car during bankruptcy. Explain to the listeners, why do banks like to lend to people who are filing bankruptcy?
Absolutely. Great question, and one we get all the time. So, you're kind of in that sweet spot. So when you're filing, it's wiping the debts, wiping the sins clean, giving you a fresh start. And what happens is really time sensitive. That's why with our clients, we like to talk to them, potentially before they file, ideally get a pre-approval, make sure they have all the information so that when their case is filed, not discharged, when it's filed, we can literally put them in a vehicle within days. And what happens is if they wait too long, anyone is going to start accumulating debt post bankruptcy. And when you start doing those things, that's going to take these financing options off the table. So really, I always say it's kind of a one-time opportunity. It is time sensitive. And whether you move forward with it or not, it really doesn't matter. You at least want to have the information so you're informed and can make the best decision for yourself.
Yeah, so during a bankruptcy, you wiping all your debt away, so it's easier to qualify, 1. But 2, the other advantage that we've heard is that you can't file bankruptcy for another 7 years, right?
Right.
So the banks know, "Look, you're not gonna have this car for 7 years. You're a good credit risk." Now, a lot of people think, "Oh, well, after when I file bankruptcy, I'm not gonna be able to get a normal car loan." You're gonna have to go, like, to a buy here, pay here place where you're
Right.
paying 25, 27%. That's not what we've seen with the clients either. I mean, you can get interest rates, talk about it, like normal, I mean, maybe not the prime interest rates, but what type of interest rate's possible for someone who's filing Chapter 7 bankruptcy and is gonna get a car loan in the short term, like, 30 days after bankruptcy or 30 days after filing?
Yeah, so excellent points and completely accurate. So, what we're talking about with this kind of time sensitive chance to replace your car as part of the bankruptcy process is you can qualify. And again, I'm hesitant to put numbers specifically out there because every case is absolutely different. But the answer is it's far better interest rates than traditional subprime financing. And again, it's because you're going through this process, you're getting a fresh start. The banks know that and they're willing, they want to take on these loans. So it's a very special opportunity that folks need to know about.
So let's just if you don't we don't talk specifics, and that's fair because things change. If subprime is here, right? Like
Yeah.
very expensive, and prime is here, it's somewhere in the middle where you're getting a decent rate, and this is not a loan you're gonna have long term. As Evergreen Credit Counseling, we've said at Evergreen Credit Counseling, it's easy to rebuild after a bankruptcy. They actually give a program away, 7 steps or 720 credit score to teach you how to rebuild your credit. With your car loan or a car loan during a bankruptcy, they start rebuilding automatically. So then they could do something like a refinance a different car to a normal rate in a year, 2 years in the future. Right? You've seen that?
Yeah, all the time with our clients. So, the thought is that you get into a vehicle, help set a budget, we get you into something that's affordable, that makes sense. You start building your credit back, you make the payments. We use terms like, you can date your car but not marry it. Maybe this is the car before the car, and get you down the path to financial success, and then maybe you get something a little bit more expensive or something that you've always wanted. But let's get the basics in place first. The whole point of bankruptcy is obviously to get into a better financial position. Let's use a vehicle to do that. And then you can refinance, or you can qualify for hopefully better financing on a different vehicle down the road. And that's a path we see clients go on all the time.
Well, and I also want to talk about the type of cars people get during bankruptcy. What I mean? We've laughed about this before. People calling in and they want an F-350 tricked out or a brand new Tesla or something. It doesn't work like that. Okay. The
Right.
reality is the when you file bankruptcy, you're going to get a car, a few years old, and it's the Toyotas, the Kias, the whatever that is, right? Like, what's a typical car that you sell, you know, that's a standard car most of the time? I mean, I don't wanna create an expectation that people file bankruptcy and get on BMWs, right?
Right. Well, they can. It all depends. So our entire dealership, since all we do is help consumer bankruptcy clients, is set up from the inventory we carry to our loans. All the different aspects of this are set up to put our clients in a good spot for financial success long term. So we have a huge selection of vehicles. We have, cars, trucks, SUVs, all sorts of stuff. But the main objective there is that our vehicles are typically, 2 to 3 years old, around 50,000 miles. And we do that intentionally so that we have the depreciation taken out. So other folks might, go to a lot and get a new vehicle, and as soon as you drive it off, it depreciates 15 to 20%. But if we're really trying to put people on a path for financial success, A to Z, it has to be in line with that. And our inventory, some we've got beautiful vehicles, incredibly well maintained. Everything comes with a warranty and gap insurance, but they are intentionally in that range so that folks aren't walking away with a depreciating asset, straight away. We're setting them up for success.
So there's two things. So you only work with people that have filed bankruptcy, and that's the first thing. Second of all, your income requirement, right? You have an income requirement. You can't help someone who only makes 24,000 a year, right? Because you ship nationwide. So there's complications. So, well, what's your income requirement for single and married?
Sure. So for single filers, it's $3,500 a month, gross monthly income, and that can be a combination of, paychecks plus disability or other types of incomes that might be available. And then for joint filers, it's 4,000. And it kind of is a special program, and it allows us to include the things that we discussed, like warranty and gap insurance, to really make sure our clients are on a good path. They have to be set up in every way possible that we can for success.
And also, you can ship anywhere except Alaska and Hawaii, right? You work in all 48 states of the main, the mainland United States. And your credit score doesn't matter, right?
Correct. We'll have folks that, might have a repo, maybe even a couple repos. And because we're so specialized in this space, we've got great relationships with the banks that do bankruptcy, auto finance, and we're able to get approvals where nobody else can. So,
So,
yeah,
and here's the thing, for those of you who are thinking about filing bankruptcy or considering it, your bankruptcy attorney may not even understand these programs, because we work with bankruptcy attorneys from all over the country in all 50 states, right? And they're actually surprised when we bring Ash Auto Group up. So if you're in debt, you've actually, whether you've considering filing bankruptcy, whether you're in debt and you're not sure what to do, what we've learned is that people who are in debt a lot of times are confused. And who do you talk to about this? With Evergreen Financial Counseling, we're a nonprofit organization. You can take our courses, and the courses cost $20, right? And if you can't afford it, we're going to give it to you for free. You're going to go through the course and you're going to fill out your own budget. And then at the end, you're going to talk to a real person about your debt. This isn't like an all automated program. You're talking to a real person, a credit counselor, about your debt. And then we can point you in the right direction if you qualify for bankruptcy, if you don't, et cetera, et cetera. And we create these videos to bring value to our clients, because we understand how hard it is to be in debt. And that's why we do what we do. Jonas, anything else you want to say?
No, it's a very special opportunity for us to be able to help folks that a lot of times need assistance the most. Um, Everyone has questions about what's going to happen with my vehicle. What are my options when I'm filing, consumer bankruptcy? And we are absolutely experts at this. This is all we do, and we're here to help, and that's it. I always say we don't even have sales folks here. We have consultants. We're providing information, and we're helping a lot of people doing it, and it's extremely rewarding for us.
Well, we're doing it together. And if you like this information, spread this off to your friends, please. The more we get the message out, the better. Have a great day.